To PrimePay's monthly webinar series for our broker partners. We want to also wish you a very happy 4th of July holiday that is forthcoming. We trust that as everyone kind of gets out and about, that you travel safe, at least through this holiday weekend. It's always a fun time this time of year, that indeed. We have much to be proud for. We can be proud of our USA Soccer Club, even though they finished at least last evening in the losing column, but we can still be very proud of what they did there for the U.S. I enjoyed watching them play, and so 4th of July makes us proud to be a part here of America, and so just hope you guys have a wonderful upcoming weekend with your friends and family. So we want to welcome you to our monthly webinar series that we have been putting on the first Wednesday of every month, really over the last many years. So thank you for taking time out of your busy schedules to sit with us today. My name is Steve Jackson. I'm the Senior Vice President, Strategic Development and Channel Sales here at PrimePay. And so we want to welcome you today for actually a very important webcast. I will say, as I put this webcast together here over the last several days in preparation here for the presentation, the content is really rich. As most of you know, we drive a lot of technical guidance through these webinars, and ACA has given us plenty to talk about over these last 4 years. But compliance needs to be broken out into a practical sense. And so what I mean by content rich here today is that I really hope that when we're done with this webcast here today, that you will actually see that it is something that you can take to your clients immediately, and actually in a very practical way, the way that it's laid out for you today. See, we all live in a compliance world. You know, when you think about your agency and what you ultimately deliver as solutions to your clients, every single one of the products, the benefit offerings, the solutions that you drive, that you sell to your clients, has some form of compliance that's attached to it. And that is either just straight ACA, it's ERISA, it's Cobra, it's Section 125, IRS. I mean, there's so many different variables as to why you will need to comply with a particular entity, you know, Department of Labor, whatever it may be. But at the end of the day, you're tasked with guiding your clients through it all. So one of the things that, actually before we get started, and I think several of you have already started to provide some questions, and that is fantastic to see some questions here right out of the gate. Please feel free to use the GoToMeeting menu bar to type in your question. I may not be able to get to your questions today, just the way that it ends up working, but as has been our custom over the last many webinars, when we send you our follow-up of the recording and the slide deck, we will also provide an FAQ in response to all of the questions that were asked during the presentation. And that has worked out really well because you then have a chance to see all the questions and get a sense of what others have asked that you may not have thought about asking. Okay? So as I was preparing my agenda here for today, one of the things that I wanted to stress here is that this isn't my agenda. I labeled it your agenda. This is actually could become your compliance agenda with your clients, with your prospects. What I really hope that I start to provide with or show you here today is a way for you to talk to your clients or prospects intelligently about these key compliance areas. Now, are we talking about everything? Are there things that we're not bringing up today? Yes, there's so many, right? I mean, I've tried to focus on some ones that are, you know, we need immediate attention on today, but then things that are coming up here too over the next year or shortly thereafter that you really need to have that strong conversation with your clients. So Today's agenda that I'm going over is actually your agenda. So we're going to cover your agenda here in a few key things. The first off, I will provide kind of a checklist for ERISA and Cobra. For those of you who joined us last month on our ERISA overview webinar, we kind of dug a little deeper in regard to what ERISA is all about. But now let's just give you a checklist to ensure that your clients indeed have the things necessary in order to comply with ERISA. Also Cobra as well. Another big area is compliance testing for Section 125 plans and 105 plans. You might ask yourself, Steve, we're still talking about compliance testing? Yeah, we really are. It's a big deal. So let's kind of touch on that and how you can talk and communicate with your clients about that. We do need to communicate the PCORI fees and the reinsurance fees. You need to understand how your clients need to conform to those specific fee requirements. You do need to understand the new HPID rules, and some of you might go, HPID? What's HPID? It's the Health Plan Identification Rules. You need to understand how your employers are going to need to utilize or obtain possibly an HPID. We do also need to take some time and clarify the new ACA reporting requirements for employers. This is a very interesting conversation because of the data that is required to be able to report. So we're going to cover that checklist here today. But lastly, through it all, we want this to be able to set the stage for you to coordinate this due diligence with your clients and or prospects. And I hope you're going to gain a lot from it. Like I said, a lot of content. Please take notes, but in the same token, we are going to provide you with a recording and also the slide deck. So, we will provide this to you as well, okay? So let's go ahead and get started. One of the biggest, when you think about compliance, all right, these rules, right? Rules and requirements, you must do this. Here's the procedure for that. You must follow this rule and then do this, right? Here's steps 1, 2, 3 you must follow. Well, compliance is one thing. Yeah, okay, I'll do it. I guess I should do it. It is a rule. But what's happened over the years is that there's only been enforcement in certain areas. Okay? Under ERISA, you've seen more enforcement under pension benefits, not necessarily under health and welfare benefits. When we've seen audits on FSAs or on HRAs or HSAs, possibly, it's very far and few between in regard to the enforcement capabilities. But audits are on the rise. Okay, they are absolutely on the rise. I think our current statistic is about a 250 to 300% increase in the number of audits that we've seen prior, just in this year. That's the kind of audit increases that we are seeing on a lot of our 105 plans, Cobra compliance measures. So the question is not if, it's when. So you need to comply. Are your clients ready? So one of the first things that we're going to touch on here today is ERISA. And I'm going to flow through a checklist here with you, but I want you to, I guess before we start running through the checklist, I want you to think about how you need to address this information with your clients. You should be asking questions to a prospect potentially. Hey, do you offer any health and welfare benefits, right? Do you have a plan document? Do you have or distribute an SPD, a summary plan description? What type of group benefits do you offer? So from a prospect basis, there's some great due diligence that you can have on ERISA, okay? Also, if it's a current client, you want to begin asking this current client, hey, well, do you have an SPD and have you been distributing them to your employees in a timely manner, upon request or upon a new hire? Have you made any changes in the plan where it's required amendments or summary of material modifications to an ERISA plan? Employer, I see that you are a large employer, over 100 lives. Did you file a Form 5500 form that is required? I mean, these are great questions to dig into with the client. Now, once you ask those questions, clearly the employer is going to say yes, no, maybe, look at you dumbfounded. I don't know. They might give you some looks. Who knows? But that's where I want you to get now into the checklist, okay? So as an employer, you know that the employer does indeed have a medical plan. Let's just use that as an example. So you're, as the broker, as the producer, you're the broker of record on that medical piece of business. So now you need to start asking some questions. Well, employer, do you have plan documents? And also any corresponding amendments that would be included with that over the past year. Now, one of the things that an employer will spout back to you is, well, I have my insurance contracts, which is important. You see that in the 5th checklist. Do you have all insurance contracts? And very important, right, to have. Why? Because an ERISA wrap plan wraps itself around that insurance contract or contracts. So just having an insurance contract, if you participated in the webinar last month, I was very much providing the answers there that insurance companies generally do not provide any ERISA documentation or compliance needs. Might have some language in it, but it's not actually complying to the full ERISA requirement. So, employer, can you provide to me or to an auditor, if they were to walk in the door right now, the plan documents, including amendments, a summary plan description, employer, which is the most, or I feel very much, the most important piece to an ERISA documentation. The summary plan description is the employee piece that will be used to provide information about their plan to the employees, okay? If they're a large employer, boy, employer, are you filing Form 5500 and any of the accompanying schedules, okay? So Form 5500 clearly is important. Within the documentation, are you listing all of the service providers and contacts? All of that must be listed. You see that a lot of times in Section 125 plan documents. I mentioned before all insurance contracts. But also, employer, what about sample notices? Are you providing sample notices for creditable coverage? Now, for creditable coverage notices, those actually will no longer be required at the end of this year in 2014. So starting in 2015, that notice requirement will go away. But, employer, in 2014, are you providing creditable coverage notices? What about special enrollment notices? All right. What about those special enrollment notices of the 30 to 60 days? There's a lot of special language now covering these special enrollment rights of individuals. Do you have language in there, notices that you're providing to do that? Now, there's many other annual notices. There are, and for today's sake of the webinar, I didn't want to go so granular, but just think about summaries of material modification. So if you made an amendment to the plan, you're going to need to actually create or deliver an SMM, right? What about a summary annual report, a SAR report? So there are other annual notices that clearly should be provided as well. So employer, what specific notices are you utilizing? Most of the language needs to be written. This cannot be somehow, well, I verbally have stated to my employees this particular item, or I've stated this, or I've done that. It needs to be written. So employer, do you have written language for your plan enrollment? That should clearly be stated in the SPD or in the plan document. What about written language for all mandatory employee notices and disclosures that would be involved? You have the WICRA notice. This is an annual notice for the Women's Health and Cancer Rights Act that must be established. There's also a statement of rights for ERISA that would also be included within the documentation, so the plan doc, the summary plan description. You also have an annual notice requirement for qualified medical child support orders, QMSCO, where for those support orders, that also needs to be provided. As you all know and are aware, you have the exchange notice, right, that an employer must deliver to new employees within 14 days of being hired. So an exchange notice must be sent out, whether they are offering coverage, not offering coverage, is it affordable, is it not affordable, hey, employee, you have a healthcare marketplace that you can go to. That's what that exchange notice is about. And then what you guys have seen here actually for the last couple of years, I guess, has been the summary of benefit coverage, the SBC. And certainly the your carriers are going to deliver on that specific item, but also you've got self-insured plans that a TPA would provide, you know, other SBCs as needed for HRAs or other self-insured plan benefits. Then you also, a very important piece, and it should not be overlooked, a great question to ask as part of your checklist is, do you have written claim appeals and procedure language? Very important under ERISA that the appeals process, the claims process be listed, be written. So employer, what kind of written claim appeals and procedure language do you have? And then lastly, and again, this list isn't so extensive that we went super granular. I probably could have 5 or 6 slides of all the requirements, but wanted to kind of siphon it down to these. Lastly, here is a Fidelity Bond, and that's only if required. It depends on how the particular ERISA plan is funded as to whether you need a Fidelity Bond. You see a lot of Fidelity Bond requirements for the pension side of ERISA, so pension plans, less so on the health and welfare benefit plans. But let me just tell you, just from a fidelity standpoint, one story that I can provide. There was an audit here recently where the Department of Labor came in. It was an ERISA audit, and they were going down these steps, right, this checklist, if you will, of all the requirements that are needed, the written language, the notices, and the employer is passing with flying colors, doing a fantastic job with ERISA. They get to the last item, which is listed here, the Fidelity Bond. I see how you've established this plan under ERISA that you need a Fidelity Bond. Show to me your Fidelity Bond. Well, that employer did not have a Fidelity Bond and was thus then penalized for not having that. So they ran into a penalty just for that last item of having a Fidelity Bond. So, here we go with ERISA where we have a strong requirement that employers must follow. And you know what? Most employers, I think the current statistic is that more than 3/4 of employers today are not complying with ERISA on their health and welfare benefit plans. Tremendous opportunity for you to provide due diligence in this area. So that list, I think, you will find useful as you sit with your client and just go over the important steps that they're going to need to perform in order to comply under ERISA. Then we get to Cobra. I mean, if ERISA isn't bad enough and your client hasn't looked at you kind of dumbfounded, well, employers understand Cobra. Certainly Cobra has been enforced by the Department of Labor forever, right? So for a long, long time, for decades, I suppose. But something recently has, I guess it was March of 2012 in that time period, that the IRS has now become an enforcer of Cobra. So alongside of the Department of Labor, you now have the IRS knocking on an employer's door, and they can knock on that door solely for the purpose of Cobra. So one great item, though, that the IRS provided was an actual checklist that you can use. Now, I've shown this before to some degree, so I don't want to go into crazy detail here for the Cobra audit checklist. But what I want you to do is, if you have an employer that follows these 15 items, okay, that is listed here today on a couple of these slides, then they should conform under, under Department of Labor. It's an extensive list, okay? So, but you need to have these conversations with your clients about Cobra and how they're actually administrating Cobra. This will go with an employer that is doing it in-house, if you're doing Cobra administration for them, or whether they're certainly outsourcing that to another vendor. These questions are valid in each and every case. And the first one, the first question that I show is, and this is what the IRS had stated, was, do you, employer, have a copy of the Cobra Procedures Manual? I will say that this question alone, virtually all employers, unless they're using PrimePay services, will not have a copy of the Cobra Procedures Manual. And you can check off a no right there, and right away they would fail an IRS audit. Okay? So a Cobra Procedures Manual, great question to ask, that details the entire administrative aspect of how Cobra is done for their former employees, qualified beneficiaries. we'll go quickly through some of these. These are pretty standard. It's speaking to the letters, those who did qualify under Cobra with status event changes and so forth. But let's go through these quickly. The employer is going to need to show copies of standard Cobra coverage letters that have been sent to qualified beneficiaries. They're going to need to show a copy of internal audit procedures, so how they kind of audit their work throughout the year. You know, an easier one, copies of all group health plans. That's an easier piece. Details on any past or pending lawsuits. Okay, so if something is certainly current or past a date, that's going to need to come up in the findings. What are the number of qualifying events occurring in the year under the examination and through the current date, so through that period of time that they're examining the employer's records. They're going to need to describe how qualified beneficiaries are notified of their rights. Do they do it in person? Do they send it first class? You know, just what is that process? What does that look like? They're going to need to explain how the plan administrator is notified that a qualifying event has occurred. So is the plan administrator in-house? Is the plan administrator you? Is the plan administrator another TPA or outside vendor? You know, how is that done? You know, how is that handled? You're going to need to explain that. Next, you're going to need to describe the election made by qualified beneficiaries to continue the health coverage. So how is that election? How do they actually elect their benefits under Cobra? How are the premiums paid? We need to have a good understanding of how a Cobra beneficiary actually gets those premiums to you, okay, in the hands of you, and you know, how is that handled? They're going to need copies of federal and state employment tax returns filed during the current period under the examination and the preceding year. They're going to need a list of all individuals affected by a qualifying event. So depending on the turnover, think about just what needs to go on there in all the individuals affected by a qualifying event. How are we getting that information? Where is that information coming from? A list of all individuals covered on the current and preceding years for each plan. And it would include all employees and dependents would be listed there as well. Personnel records, we won't go through all of these, but the personnel records of each of the qualified beneficiaries, so name and address, the event date, the copies of the notices. So basically showing to an IRS auditor that, hey, I've completed the necessary compliance tasks to keep me in compliance under Cobra. And then lastly here, if Cobra coverage was denied due to gross misconduct, you know, verify the employee was denied unemployment benefits for that same reason. So that's always a fun one, right? Because they really clearly haven't defined gross misconduct under the federal, under federal regulations or under the guidance there. So it's, yeah, okay, you know, you kind of got to go with it, but gross misconduct is some of the worst stuff, you know, an employee stealing, things of that nature, but just ensure that there is consistency in regard to the unemployment benefits as well. So as you think of those 15 things, I mean, there are 15 things that you should be doing. Many employers, vendors, do an excellent job of providing the necessary information for their plan sponsors, for Cobra, right? So outside vendors generally do a very good job. But I go back to that very first question. Do you have a copy of a Cobra procedure manual? And that is a good question to ask because many vendors actually do not provide that as well. So one thing that we wanted to do to help you, and we've shown this before just in some other webinars, information before, we have created a really nice, easy-to-read checklist, a one-pager that you could sit there with your client, put the client's name on there when you talked about this information, and simply go through each one of those 15 items to ensure that your client or your prospect has indeed been following these compliance guidelines. So ERISA and Cobra, wow, I mean, I tackled two of the really biggies, right? Cobra has been enforced tremendously over the years by the Department of Labor. You now need to understand that it's now being enforced and audited by the IRS. They very much are involved on a Cobra side. In ERISA, ACA has put a target right on the back, right on the face, I guess, of ERISA. Employers today will need to comply tremendously under the ERISA guidelines and requirements. They need to do it, so hopefully that was helpful from an ERISA and Cobra basis. So non-discrimination testing, you know, as you look at the picture there, sometimes I feel like when you start to dig into the actual calculations of compliance testing, I think you do turn into somewhat of a mad scientist because your eyes could glaze over a little bit talking about compliance testing, Section 125 testing. But what I want to emphasize with this is that the requirements still very much exist for both Section 125 and 105 plan non-discrimination testing. And it is something not for you to simply just kind of throw it under the rug or let's hope the client is doing these requirements. Let's ensure that the client is actually managing this particular compliance aspect. So non-discrimination testing. I do not plan, for those of you who are hoping not, I do not plan to go through all the calculations of the test. I don't know how fun that would be. So what I wanted to do was really give you a broad, but actually a strong talk track in regard to how to talk to your clients about non-discrimination testing. So why is this so important? Well, first off, it's required. So it's not a, well, best practice would be for you to kind of do it, maybe, you know, possibly. No. It's required to do. And what it does, why it is so important, is that it does ensure equality, right? We have these definitions called highly compensated employees or highly compensated individuals. And I guess if you were to put this in simple language, non-discrimination testing has been born for the reason that we don't want the highly compensated employees to be receiving a greater benefit, okay, than what the non-highly compensated employees are receiving. So the non-discrimination testing is very much in favor of the non-highly compensated employees, okay, to ensure equality, that the plans should be tested for both the eligibility. You know, are eligibility practices the same for both highly compensated and non-highly compensated employees? What about contributions? Is the employer making a larger contribution to the highly compensated employees than the non? And benefits, are we being consistent with similarly situated employees with different classes, or, you know, for everyone? Everyone's receiving the same benefit. Well, to know, too, why it is so important is that there is high stakes. There are very high stakes. They are subject to an IRS audit. If a plan has failed, a high stake can be that the plan disqualification means that you can lose tax advantage status. So the specific plan in question could be completely disqualified. You also can have penalties that range from more of the smaller types of fines to excise kind of taxes. If there's some civil or other types of issues going on, it could even go to imprisonment. So, I mean, the penalties can range very broadly from not very much fun to no fun at all. So what plans does this apply to? Non-discrimination testing applies to a lot of different areas. The one area that I'm not talking about today is on 401ks, so I'm not really going into detail there in regard to retirement plans. But as you think about your self-insured types of plans, okay, in group health plans, it centers around these four key areas where many of your clients have probably one of these plans somewhere in the mix. So cafeteria plans or even a POP plan, a premium-only plan, you know, sometimes referred to as a Section 125 plan. Health FSAs, which also flows under Section 125. Separate testing for dependent care accounts. We sometimes call those DCAP accounts. And then lastly here under 105 is health reimbursement arrangements, which Section 105 also touches on health FSAs as well. Okay? So it applies to each and every one of these plans. So one of the things that always comes in the mix as you're talking with your clients and or prospects is, well, all right, I understand. I don't want to have this top-heavy plan where we're favoring highly compensated employees, But who is a highly compensated employee anyway? So an HCE. What plan are we talking about? Because the plan that you're talking about is going to depend on what the definition is. So for Section 125, you have definitions for highly compensated employees that talks about, well, are you an officer? Are you a more than a 5% shareholder? Are you an employee that's earning, compensation more than X from the previous year or current plan? Are you an employee that is a spouse or dependent? But then you also talk about dependent care, and dependent care even has other definitions for, maybe more than 5%, maybe they have a more than 5% owner's test, which changes kind of the game here a little bit more. And so then you get to Section 105. Well, what is the definition of a highly compensated employee or individual under 105? Well, there you get into even a crazier definition. It's one of the 5 highest paid officers, could be a shareholder who owns more than 10% of the value of stock, but it also could be any individual among the highest paid 25% of all employees. That's enormous. So you could have a small employer that has several employees, maybe it has 40 employees, 70 employees. Well, the top 25% are going to be considered highly compensated employees. So it is very important under Section 105 that you actually have a plan that's non-discriminatory, all right? So, when you think about compliance, you can make corrections during the plan year, but if you fail to make corrections in the plan year, those who are highly compensated employees will have taxable income equal to their elections for the benefits which are out of compliance. So note that the HCEs, these highly compensated individuals or employees, can be greatly affected by being out of compliance or the plan being out of compliance. So just looking here as a checklist of some of the tests that are required under Section 125 and Section 105, I have put them here on the board and on a slide here for you. Now, your eyes would certainly glaze over, and your clients, if you had to describe each and every one of these tests. So I just want to go through these just to prove a point for your clients that, look, if you have a cafeteria plan, did you perform the eligibility test, the contributions and benefits test, the key employee concentration test? An employer, if you've got an FSA and you also have a dependent care account, did you run an eligibility test just for the dependent care account, contributions and benefits test, a more than 5% owner's concentration test, and lastly, a 55% average benefit test? So do you have proof, employer, that you indeed have passed those specific tests? That's a great question to ask. Do you have proof that you have passed those tests? Secondarily here, or just another under 105, you have self-insured plans. So when you think about a self-insured medical plan, many of you work in that environment. You have and offer medical plans that are self-insured for small to large employers. And I'm not specifically talking about that plan, although Section 105H, which handles the non-discrimination rules under 105, applies absolutely to self-insured medical plans, but it also includes health FSAs and all 105 plans, which would be HRAs, health reimbursement arrangements. There are, in essence, I'll say 2 main tests under 105. Okay, under 105H. The first main test is an eligibility test, but under the eligibility test there are 3 subtests. The first is the 70% test, and just very briefly, if you can pass this test, can you demonstrate that it benefits 70% or more of all employees? Okay, pretty easily, all right? Can be very easily done. Then you have the 70-80% test. So, all right, let's see here. If you didn't pass just the 70% test, we'll take it a little bit further. Can at least 80% or more of all the employees, are they eligible for the benefit of the 70%? So you have this 70-80% test that they could pass. And then lastly is the non-discriminatory classification test. And this is actually, there's 2 subtests. underneath that particular classification test. And I guess just think of it like this. It's a it actually works more with looking at classes of employees, similarly situated employees, and so there's additional tests that you can look at in regard to classing, okay, that is made. And then lastly here is the benefits test. And so each one of these, so if you've got a client who has an HRA, they've got a self-funded medical plan, they have a health FSA, they have a straight Section 125 plan, a POP plan. There are some safe harbor potentials for, let's say, Section 125, a POP plan, but all in all, these tests are required as part of the non-discrimination testing under the Internal Revenue Code. So again, the IRS rears its head here once again in regard to the compliance for non-discrimination testing. So the requirement is that you must be passing on the last day of the plan year, okay? So the last day you just need to be passing. So what is the best practice? It's generally, if you perform the test mid-year, you should get a good handle on whether you are going to pass or not, or if you're close or you're not, you're on the bubble. But we'd also recommend end of year. So what you have to look at is just determining, look, has your population changed? Do you have more highly compensated today? Do you not? Do you have basically the same employee base as you had when we ran our test mid-year? If everything is pretty much equal, I mean, you don't necessarily have to run end of year, but it would be recommended if you were very close and if your population changed to a larger degree. So under the plan failure tab here, corrections can be made during the plan year. In fact, corrections should be made during the plan year. So that's why it is very best practice for you to perform the test by the end of the year, prior to the end of the year. That way you have adequate time to make those appropriate changes before the end of the year comes. The tax-free treatment of benefits is lost if made after the plan year. So very important to have this conversation. Again, it's a requirement. It's not something to be overlooked. The time has now come for PCORI. Certainly, for those of you who have, have clients with HRAs and certainly self-funded plans. There's fully insured plans, but the PCORI fee, the first filing was due last July, and once again, the time has come for PCORI. So we want to touch on both PCORI, but something new here for this year that will apply to employers is the reinsurance fees. So what I've done is create a checklist for you, which I hope, again, you'll find very helpful as you're talking with your prospects and clients in regard to if they need to comply with one or both of these fees. So hopefully this will be helpful. So with the PCORI fee, if we're just talking about an HSA, so if an HSA is what the employer has, there's no, generally that's not going to be subject to the fee. So nothing there that you need to necessarily worry about. HRAs are subject if reimbursement is greater than $500. I'd say most HRAs today fit into that category, and so an HRA would be subject to the PCORI fee. Health FSAs are subject if the employer contribution is greater than $500. So something to look at. Great question to ask if you're talking to a prospect or maybe to a client where you haven't really dove into the health FSA. Do you make a contribution to your FSA? And that's going to tell us whether the PCORI fee would be in play or not. From a reinsurance fee side, HSAs, again, are generally not subject to the fee. HRAs are also, not subject to the fee if integrated with a group health plan. Most of your HRAs today are integrated with a group health plan, right? In fact, ACA has kind of removed a lot of the ability for just straight standalone HRAs. So most of your HRAs, virtually all of them, will either be integrated with a group health plan, but also reimbursing accepted benefits, okay? One of the things that I do want to stress here is that, and I think I show it here on one of the slides here, this does revert to self-insured plans. So I'm focused here right now on HRAs as a 105 plan, but self-insured plans, your plan sponsor, which is your employer, the employer, would be responsible for the reinsurance fee. The HRA would not be subject if it's integrated with that group health plan or self-insured group health plan. So the PCORI fee, the fee calculation and due dates for the policy and plan year ending after or before these dates, you would either pay $1 per covered life, prior, and then from 10/1/13 through 9/30, they'll pay $2 per covered life. That is the general rule. I did not want to go into necessarily the full calculation. Calculation is pretty easy to actually do. We try to help our clients as much as we can to run any reports needed to reflect the specific method that they want to use in determining their number of lives. The payment is due no later than July 31st. So this is right now they need to comply using Form 720. On the reinsurance side, the 2014 annual fee is $63 per covered life. So what I want you to think about here is the self-insured plans. Think of your employers who have self-insured medical plans. They will need to comply with the reinsurance fee, the $63 per covered life. And the due date, they must provide HHS with the enrollment data, so the number of covered lives, the enrollment data, no later than 11/15 of this year. You will then be notified by HHS, and the payment is due no later than 30 days of receiving the fee notice from HHS. So all that is done through HHS. So they're going to look at the number of covered lives from January of this year through, September, October of this year, submit that enrollment data to HHS, and then they will be determining the appropriate fee. Here's a good one. The next item on our compliance checklist here for today as part of your agenda with your clients is this health plan identification number. And I know many of you might be sitting here going, Steve, what's HPID? What is HPID? I do not know what this is. There's been some recent information from carriers about this particular subject, and we wanted to take the opportunity to actually cover this with you because you may not know fully the extent of which of your employers will need to comply with this new requirement. So this is, or kind of brought to us by HIPAA, and it does require action by employers. And that is the Health Plan Identification Number, or HPID. So get used to an additional or new acronym here in your vocabulary. So what is the HPID? So it really it has been formed initially through HIPAA, then reaffirmed through the HITECH Act, and then also greatly confirmed and reaffirmed through the Affordable Care Act, where it requires standardization for all health plans. Carriers, so fully insured plans for the most part, have been utilizing an HPID, a 10-digit number, for standardization as they transmit information to CMS, as they use information in between agencies or business associates. They're utilizing a 10-digit number, okay? So, but the final regulations were published September 2012. So at this point in time, we do have clear direction in regard to who needs to comply, what is it, and who needs to comply. So if you think about it, okay, an HPID is a 10-digit number, okay? So who needs it? All right, so, and I'm just going to focus again here on self-insured plans. Okay, that is the focus here of my conversation today. You have health insurance carriers on fully insured plans that are going to be driving some HPID information on their end. But from a self-insured basis, they must obtain an HPID by November 5th, 2014. That's coming up here soon. Now, what I also want to stress here, though, is it also includes a health FSA and an HRA. All right, so a health FSA and an HRA both need to obtain an HPID. All right, there was one exception or an exception, a kind of a small plan exception or delay that was granted based on the final regulations published in 2012. And that was for small plans, so plans with annual receipts or claims paid of $5 million or less. So I can't sit here and say that every self-insured medical plan has fewer than $5 million in claims paid, right? I mean, you could certainly run into situations where they are going to be considered a large plan, and they're going to need to receive their HPID by November 5th of this year. But if you are considered a small plan, and I would almost say with a lot of certainty that a health FSA and an HRA will be considered a small plan, okay, based on the size of claims paid, not even close to $5 million. So they will not have to get their HPID until November 5th of 2015. So they were granted a year kind of reprieve or delay. This is required for all controlling health plans. So you'll see a new acronym, CHP, and then you'll also see an acronym of sub-health plans, and it's optional for the sub-health plans. In essence here, I'll just give you the brief definitions. A CHP is defined as a health plan that controls its own business activities, actions, or policies. So when you just think about that particular definition, an health FSA, an HRA, a self-funded medical plan is all going to flow under this requirement. They're going to be considered a controlling health plan. So when you file or they file for the HPID, they'll need to file as a controlling health plan. A sub-health plan, by contrast, is defined as a health plan whose business activities, actions, or policies are directed by a CHP. Okay, or a controlling health plan. So it's kind of like a lot of the affiliate plans, maybe there's other business associate types of plans or agreements, things like that need to flow up through the controlling health plan. And it is optional for that employer to receive an HPID for the sub-health plans or simply for the controlling health plan. So how do you obtain an HPID? How do you do that? Well, first off, what I would say, your time isn't free, what it takes for you to actually go through the application, but from a monetary aspect, it's free. So it's assigned through CMS, and it's through their health plan and other entity enumeration system. Yeah, that's a fun acronym, HPOES, and it provides an online application process that they will go through. And the registration information, I will say, what I've read and looked at and reviewed, and I suggest you go to the CMS site. There's a lot of videos. There's a PowerPoint presentation that you can view that will actually discuss how an employer receives or obtains their HPID. But it's relatively basic. Your organization information, identifying information, contact information, what specific application type that will be used for. So relatively easy in regard to that information. How will the HPID be used? Well, clearly, directly with the CMS. You also might use it as an identifier with other business associates that your employer might be working with. So business associate agreements, those business associates could also, you could use that identifier on language, on agreements, on information that needs to be passed through or with your business associates. Clearly, you can use this 10-digit ID number for your internal files, for facilitating insurance transactions. That's what fully insured carriers and plans do all day long. It could also be included now or in the future on the enrollee's health insurance card. So along with the group ID, there's now maybe a health plan identification number that's attached, or it replaces that group ID. This will be used in conjunction with federal and state insurance exchanges. So the HPID will actually be utilized through those exchanges and then also for any public health data reporting purposes. So HPID may not have been on your brain, right? I don't know if it necessarily was on my brain here even a few months ago. But as time has gone on, you do need to understand which plans are affected. So again, your self-insured medical plans, self-insured plans, but also your health FSA and your HRA under 105 will also be a part of the HPID checklist. All right. The last item that I want to cover here today, and it's something that we're still looking just a little ways out, not far, and I'll tell you here in a second. But this is a conversation that you're going to want to get a jump start in with your clients. There's a lot of data that is required under these new ACA employer reporting requirements. And so you need to have a good handle and a good way to discuss what is needed for your clients. Very important that you start this conversation today with any of your employers. So just to kind of, what's the backdrop, or what's the what's precipitated this, is that this information certainly was first published way back in the early days of ACA in the original bill, but there was some proposed regulations surrounding how to do employer reporting, and the final regulations were finally published here on March 10th, 2014. So when you think about employer reporting requirements, why is the IRS requiring employers to provide all this level of detail? You might have heard of something called verification, enforcement of individuals who go onto the healthcare.gov, they enroll in coverage, maybe they receive a subsidy. We need to verify and then enforce whether that employee should have received that subsidy, that premium tax credit, or is the employer at fault? Is there a penalty that is supposed to get back to the employer? Whether it's that harder penalty, that $2,000 penalty, or it's part of the $3,000, kind of the affordability penalty that would be in place. So it's really, this reporting requirement is going to help the IRS with that enforcement of the verification. So it's specific employer information reporting under ACA. The IRS requirement, it is an IRS requirement and reported by any applicable large employers and self-insured plan sponsors under Internal Revenue Code Section 6055 and 6056. So you're going to want to become very familiar with the 6055 and 56 sections. So applicable large employers who offer self-insured coverage, they're going to satisfy both requirements, 6055 and 6056. And I'm going to touch on this here in just a second here, just a little later. And all employers that provide minimum essential health coverage must satisfy 6055. All right? So you've got one for those large employers. They're going to look at both of these sections and report for both. All employers, generally speaking, they're going to provide the information on 6055 for those that provide minimum essential coverage. So let's go over a checklist. I think you're going to find this extremely valuable as you start to talk to your employers about this particular type of reporting that's needed. Let's discuss this. So the first, for Section 6055 reporting, okay? So the data that's required specifically under Section 6055. You're going to need the name, address, and EIN of the employer. All right, pretty simple. You need the name, address, and tax identification number or Social Security number of the employee who enrolls himself or dependent in the plan. You also need the name and the tax identification number of each covered dependent. And you also need to provide information for each covered individual, the months of coverage that each individual had, but even if only for one day. So even if that employee was only covered for one day, you need to showcase the months of coverage that they had. Let's go just quickly here then too, looking at 6056 reporting. There's some similarities, but then it starts to break down into some further detail. Think of the 6055 as a more simple transmittal form, okay? Kind of key highlights, the executive summary, I guess, if you will. But then you've got the 6056, which is a much further detailed employee report, okay? And I say employee because we're drilling down from an employee-specific data basis. So the first items here, name and address and EIN of employer. We've got address and phone number for the contact at the employer, so pretty basic stuff. Also a certification by an employer that they have offered minimum essential coverage, MEC. For each full-time employee, they also must provide the following: the months for which the MEC was available, so that minimum essential coverage was available, each employee's share of the lowest cost monthly premium for self-only coverage, and that needs to be broken out by month, the name, the address, social security number, and months covered of each, again, of each employee, all right? And I'm going to continue with 6056 in a second, but under 6055, we're done. We've completed. So as we look here on the previous page, those 4 items right now, as it's stated, that is what is required, okay? So as we go here into the 6055 reporting, hey, we're done. We're done with that. Section 6056, though, continues. So, as you can see, there's additional what they call indicator codes. And think of like an online application where you're kind of marking off yes, no, true, false, I did this, I didn't do this, and so forth. So kind of indicator codes, kind of check mark boxes, if you will, on whether they're doing this or that. So these indicator codes also need to cover, well, listen, the coverage that you provided, was it minimum essential coverage, and did you actually include spousal coverage? Yes, no. What are the total number of employees by each month that you covered? Did you provide enforcement of the permissible waiting periods, 90 days, and so forth? Is the employer part of a controlled group? Is the employer part of a multi-employer plan? Is possibly a third party handling this reporting on behalf of you? And if so, I need the contact information, okay, of that third party. Was minimum essential coverage offered to just the employee only? Was it to employee plus dependents only, employee plus spouse only, or employee and family only? Was there some, were they specific as to how they offered coverage? If no offer of coverage, then, and they don't provide a lot of information yet, so they just kind of stated, the employer might need to discuss the employer penalty there, or if there was another situation that was created as reason to not offering coverage. Then was coverage offered to non-full-time employees, which could be, to the variable hour workforce. And listen, employer, will you be meeting the affordability safe harbor? So there's a lot of things there in 6056, right? A lot of information that's going to be needed. Think about what I just went through and the data that you're going to need to collect. There is a method for filing that you will want to at least discuss. These specific forms have not been fully vetted or, I should say, distributed as of yet, at least in the form I think that we need to see it. There might be some samples, but I don't know if I've seen necessarily a finished form. So the filing method is done on Form 1094C. So that would be where the 6055 is primarily filed under 1094C. That's more of a, as I mentioned before, a transmittal, just kind of like, I guess I'll call it the executive summary, if you will. But then, for your applicable large employers, you've got Form 1095C, and that really is more of this detailed employee statement of the data. So an applicable large employer, they're basically going to report on both 6055, 6056, and through some paperwork simplification, I guess if we can call it that, the IRS has simplified that so they only need to file that under 1095C. So special note, ALEs with self-insured plans are required to report on 6055 and 56. For fully insured plans, carriers will report on Form 1095, and the ALE will report on 6056 only, okay? So just kind of there's a little devil in the details there. Some of this, I would say, still needs to be worked out. I don't know if it's been formally noted on the forms, and we have yet to see those forms, so when they do, we'll have more information for you. What's the timing of this, Steve? You've given us a lot of information here. What's the timing? The annual filings are due no later than February 28th of the year following the year to which the information relates. So what you're looking at, the first filings will be due in early 2016 for 2015 coverage. So again, should you stop the press? Should you do nothing more than just start doing seminars on, on 60, 55, and 56 reporting? No, not necessarily. But these are conversations that you should be bringing up today, having a strong business conversation in regard to how your employers, how will you as an agency help your clients be able to conform under these new reporting requirements, right? I mean, that's what you need to be thinking about. It's a great conversation, certainly, to have. So I provided here to you a tremendous amount of a kind of checklist information that I hope that you can take and drive here right away to your clients. And I guess the next question through all of this, through what I have given you here today, is, so what will you do next? So I want you to think about this, and this is something that we've pulled with our clients here at PrimePay. We've asked our clients what are the top 3 business issues, and I think I've said this before to many of you. Regulatory compliance is one of the top 3 business issues that your clients are facing with. They're trying to figure it out, right? They're being bombarded with compliance issues all over the place, from not just, ACA, HR-related items. I mean, just an assortment of different types of compliance issues. So when you think about you and think about this discussion with your clients, I mean, I write in here, due diligence is always a tough love discussion, right? I think many of you might sit here and say, Steve, I really don't want to have this conversation because it might dig up something not so happy, right? I don't really want to have that conversation. But you know what? It's needed. And oh, by the way, it's required. Each one of these things are not necessarily the fun conversations to have, but guess what? It puts your agency in a fantastic position to be able to deliver resources to your clients in these various areas. In a survey that we ran earlier this year, many of you participated in it. One of the questions that we asked was, what are some of your largest challenges for the agency? And the second largest challenge that you all put forth to us was addressing these very critical compliance needs for your clients. So I think what a lot of you were telling us, and what you are needing certainly is that resource. You need to either start building a compliance team from within, or certainly reaching out to your strategic partners to help you with that information. So I want to leave you with this, because the timing is critical, right, on some of these various compliance issues. The most immediate needs, if I could sit here and say what you should be talking to your clients about right now, today, would be ERISA, Cobra, and non-discrimination testing. Those are 3 great opportunities to chat with your clients about these strong compliance issues. But for a lot of you, you also want to be reminding your clients with those self-insured plans, HRAs, of the PCORI fee that would be due by July 31st, that they get that appropriate filing complete. The next big item will be the HPID for large employers. So the health plan identification number for those larger self-insured medical plans, that is actually going to be required here by November 5th of this year. November 15th, on the reinsurance fee, we have employers who have self-insured medical plans. They are going to have to report to HHS by November 15th of this year. All right, and so that's going to need to be taken care of. We have a year reprieve here for the HPID for the small employers, so for really all of your health FSAs and your HRAs, they will not need to obtain those numbers until November 5th of 2015. And then this last date, it seems like it's far away, but I'm going to tell you what, it's going to creep on you very quickly. And it would give you a great opportunity here to talk to your clients about something that's coming, and maybe plan accordingly to start collecting data, to start testing how you might collect that data so that you can easily report this information as needed on these specific internal revenue codes. Now, I was looking at a couple of the questions that have come through here today. I didn't mention it, and I did it for a reason, but because of time primarily. But penalties. Penalties start generally. If you look at every single one of the items that I spoke about today, if you had to say, Steve, where do these penalties, where do they even come in? What is the penalty? Generally speaking, you're looking at penalties on virtually all of these compliance issues would start at $100 or $110 per instance per day, per claim, per employee, per day. It just that alone from the Department of Labor or excise taxes that can be levied. There's civil penalties. I told you before there could be imprisonment. It can get pretty bad. But penalties are tremendous, and we can certainly go into greater detail with you at some other time in regard to those penalties. But it definitely, these requirements need to be met, and if not, penalties can certainly be enforced. So with that, I really want to thank you for your attendance today in our webinar. I trust that you found the information to be extremely useful for everyone here. Again, we have recorded the webinar today. We will provide that link to the recording with you or to you here over the next at least couple days here. Maybe early next week because of the 4th of July holiday. We will also send an FAQ that will go over the questions and we'll provide the answers to those questions. We'll provide you a link or a copy of the slide deck presentation so you have that as well. But with that, again, thank you for your time here today. We appreciate the business that you placed with PrimePay and for entrusting us with a lot of the technical guidance that you need to rely on as you go and talk with your clients. So with that, that will conclude our webcast today. Have a fantastic 4th of July holiday, and wish you continued success here in 2014. Have a great day.